right, welcome to 2025, and let's talk about what the real estate market is doing. We've been hearing about some markets that are actually declining right now. Home values are dropping. Is Sacramento one of them? Thankfully, we are not. But let's get into it. We'll talk about some data for 2024, go over a couple predictions, what we might see happening this year in 2025. But now we've got all the data from December, so let's take a look at the year as a whole. But before I jump into that, please like the video, follow the channel. I'm going to be putting out more videos this year, more content, both local neighborhood information, market data information, projections, and ideally a lot of educational information too, just to help buyers and sellers understand some of the big changes in the real estate industry, changes in the market, and how to be best informed to benefit from all of that. So let's dive right into it. Overall, 2024 was a pretty stable year in the Greater Sacramento region. Home values or sales prices appreciated approximately 4.4% year over year. The home loan rates were fairly stable. Obviously, 2022 was very volatile. 2024, fairly stable. We saw rates anywhere between approximately the mid sixes up to the low sevens. And, that just kind of depended where the market and the bond market were at that time. Average time to sell a home was around 35 days throughout the year. Sometimes a little faster or a little slower, depending on the time of year and the season. Both buyers and sellers were able to secure some good opportunities this year. Depending on the time of year and everyone's specific scenario, we did see some great opportunities. The Fed cut their Fed funds rate by 100 basis points over 3 different cuts. We are, hard to say how that's going to translate this year, but as we saw over the last 6 months, just because the Fed dropped their rate, that did not translate specifically to a decrease in home loan or in mortgage rates. So, keep an eye out when you hear people say, "Oh, bond market dropped," or the Fed rate dropped. It doesn't necessarily mean that mortgage rates are dropping. Bond market activity in 2025 is going to determine what we see with home loan rates. I really urge everyone to be cautious. I was one of the few people that did not buy into that mantra of, you can always refinance or just marry the house and date the rate. I hate that. It doesn't work. It's dangerous, as a lot of people are seeing now. A lot of folks bought into properties thinking, we'll handle this payment temporarily. The rate's much higher than we can really, really comfortably afford. Maybe on paper we can afford it. But we'll just refinance next year. And for a lot of folks, that did not happen. So be very cautious with that. And I would just say, make your financial decisions based on the information that you have today, not what the best case scenario could be tomorrow. That's my advice. So, all right, let's dig into it. Let's talk about the Tri-County area. Here are your stats for December. Number of homes for sale, the number of homes pended, and the number of homes that sold dropped significantly in December. That's pretty normal for the time of year. We see a big drop off during the holidays. Buyers and sellers tend to pull back from the market, so that's nothing new. Those numbers were actually down 27.7%, 10.1%, and 3.0% respectively. However, year over year, we did see an increase across the board. So we saw more activity, more pendings, more sales year over year, which is good. We're seeing a little bit more volume in the market after 2022 and 2023 being very, very low. I think 2022, we only saw about 60% of our normal annual volume. 2023 was up to about 70%. So we'll see where we end up this year. Active listings were up 19.6% over 2023. Pendeds up 18.1%, and the sold homes increased 15.8% over 2023. So days on market increased 12.2% from November to December. So that is up to 46 days, or I should say it was as of last month. We are just now getting our December data. And still, that was 12.2% longer than it took for homes to sell in December of 2023. So interesting that we had a little bit more active holiday season last year, a little bit more quiet this year. The average list price to sold price ratio dropped in December down to 96%. So homes are selling at 96% of their original list price in December. That is a similar drop. So in December of 2023, they were selling at 97%. That also dropped 1% year over year. In my opinion, I think that larger than last year drop for December was due to the election and just some other national and political news. I think a lot of buyers and sellers kind of took a step back from the market, and that lack of activity allowed things to drop, put a little bit of downward pressure on that. Median sales price for the Tri-County area held stable from November to December at $595,000. And like I said earlier, that was 4.4% higher than the median sales price in December of 2023. So year over year, good increase. Interesting stat though, I was looking more at the charts and the information. So overall, the home values saw a more significant increase in Q1 and then held pretty stable for the rest of the year in 2024. So that was kind of interesting. And that's for the Tri-County area. It was actually a little different for Placer County, and we'll get into that later. So local inventory levels in the Tri-County area held stable. Those have been under 2.5 months for at least the last 2 years. As I've said before, a stable market is somewhere between 3 to 5 months. Anything 5 months, 6 months or more could be considered a buyer's market, but we still have very limited inventory in the Sacramento region, which is part of the reason that we are continuing to see some stability and some stable home values versus other markets across the country. So the lowest point was about 5.5 weeks, so just over 1 month of inventory. That was in spring of 2023. Currently for December, we're sitting at 1.7 months. That is down 26.1% from November. So again, that's just a lot of homes coming off the market for the holidays. So let's dig into Placer County. There was a similar drop in the active, pended, and sold properties for the month of December. Those were down 26.7% and 19.7% respectively for the actives and pendeds. The sold volume only dropped by 1.4%. So that was a little, that was interesting to me. The current volume is still better than it was in 2023. Thankfully, we have a little bit higher number of homes selling. However, I'm expecting 2025 to be fairly similar to 2024 as far as our sales volume. Rates have been very stubborn. They're not dropping like some people expected, and I think that's just going to continue the current trend. The higher that rates stay, the more homeowners are going to be locked in their homes with really low rates and low payments. They're not going to want to move. That means lower available inventory, which again, supply and demand, basic economics. If we have a low supply, then that's going to hold the rates or the home values stable. So I'm expecting a very similar year this year. If rates drop back into the mid to low sixes, that could unlock some sellers. We could see higher inventory levels. Could be some good opportunities for buyers to help with affordability. Affordability is really, really bad right now. So that would be a big change for this year. We'll see how that works out. Again, in Placer County, the days on market jumped up 21.7% from 46 days to 56 days month over month. That's also the same increase, again, interesting, that we saw from December of 23 to December of 24. So the year over year increase was also 21.7, up from 46 days to 56 days on the market. The average list to sold price ratio in Placer County dropped 2%. So it went from 97 down to 95. So that's really telling me it was a quiet holiday season for Placer County. And that's actually a whole percent lower than it was at the 96% in December of 2023. So this was really a quiet holiday, and I think, or holiday season. And again, I think national news, a lot of things happening, election year. I think a lot of folks just said, you know what, I don't want to make any big real estate transactions or decisions right now. Let's hang tight. So Placer County median sales price dropped from $649 in November to $640 in December. However, again, that's still higher than the 631 median sold price a year ago. So median home price has increased year over year. Unlike the Tri-County stats, Placer County saw a significant price appreciation in quarter one. It's mostly stabilized in quarter two and three, but then actually saw some drops in home values in quarter four. So that was a little bit more interesting. I would say I went and looked back a couple of years. Placer County does see a little bit more price fluctuation quarter by quarter than we see in the Tri-County area as a whole. So kind of interesting there. Placer County currently has 1.8 months of inventory. That's appropriate for the time of year, and it is well within the 1.3 months to 2.9 months of inventory that we've been seeing for the last couple of years. So we're well within our normal range. Here comes the fun part. Let's talk about some potential numbers for 2025. Before I get into this, just want to remind everybody that no one, I don't care who they are, no one has a crystal ball. We can't say exactly with 100% certainty what's going to happen, but it is fun to guess. And sometimes we can make accurate guesses based on what we see the data indicating maybe coming down the pipe, or basing that on past trends. So I would say overall expect, like I said, a similar year to 2024. Expect home price appreciation to catch its stride between February and March. And I would say overall probably see somewhere between 2 and 5% in 2025. Obviously, there are some things that could work inversely. We may see a little bit stronger economy if we do see some regulation or deregulation, and some more efficiency, giving some companies more money to spend on R&D or do some hiring and increase sales. However, some of those things could impact the stock market. If we see a really strong stock market this year, we may or may not see mortgage rates come down. So there's a lot of different things that we have to look at. We'll see how it all works together. What else can we say? At least the Sacramento region has not dropped. So I mentioned some markets earlier. Some of the large metro areas, they're actually seeing a decline in their home values, a significant decline. We're talking about Nashville, Denver, Austin, San Francisco, and 4 major markets in Florida. So again, thankfully, Sacramento has remained fairly stable, fairly strong. I do think that's going to continue. I would be very cautious about any of the big markets that exploded over the last 4 years across the country. A lot of those are really seeing things tighten up. Even some markets in Arizona, Phoenix, Scottsdale. So beyond that, let's get out of real estate. I think AI is going to have a great year. It's really catching its stride. A lot of people are becoming more comfortable using AI in the day-to-day, whether it's personal or professional use. I think the auto market still has a really rough year, potentially 2 years ahead of itself. It got very overvalued. Cars are over-leveraged. Affordability is really bad. Folks have taken on some pretty hefty auto payments. And my guess is that people are going to want to save their homes because a lot of homes are locked in with low rates and low payments. And in order to keep the house, they may have to give up the car. So I think the auto market is definitely going to see a rough 12 to 24 months. Some sections of the commercial market are going to be in for a rough time too, with rates going up. Some sectors are softening. That means fewer leases getting signed, more renegotiation of leases, lower lease rates. That can be tough for the commercial market. I'm curious to see which sectors do well. So we may see a little bit of a turnaround in the Bay Area as we see more of this return to work. So that really changed market dynamics with the work from home over the last couple of years. As we see a return to work in some areas, we'll see what the ramifications of that will be for this year. So anyway, I'm going to continue to watch the local market, bring you data updates, keep an eye on things, let you know what I see, and then potentially bring you some education and some more hefty market reports this year. So thanks again. I know that was a lot to cover, but looking forward to a great year. If there's anything that I can do to help you with real estate, please reach out and make it a great 2025.